Meantime, Goldman is out today with a very bullish note on Southwest Airlines. They upgrade it to a buy. They see positive long-term profitability. Jim, you're the only one, I think, who owns airlines on the desk today, and it's Alaska Air, not Southwest, even though they say today, well, they expect its primarily domestic network and industry-leading balance sheet to drive a faster recovery than all of the others.
Yeah, and I equate Southwest and Alaska as very similar, particularly on the domestic network versus international, but also because both of them have very strong balance sheets. The discussion is about Southwest, however, and, look, this is about balance sheet. On March 31st, they had about $500 million of net cash, not net debt, net cash on the balance sheet. They got a $2.5 billion grant in the CARES Act. That should bring them to about $3 billion. They're burning off about $1.5 billion of that this quarter. So they're going to end this quarter probably with $1 billion of cash, and they're rapidly decreasing the cash burn. They're going to be the high flyer coming out of this airline debacle. Alaska's going to be right there with them, and for the price, I like Alaska better. But I got to say, I'd stay away from the big three. The Americans, United, and Deltas, I'm staying away from those. Those balance sheets are ugly and going to get worse. Okay. How about Pfizer? Buy at Mizuho, Steve Weiss. Target, though, gets decreased to 38 from 42. What do we think about Pfizer here?
Yeah, I like Pfizer. I like the healthcare group. I still think it's very solid. I'm playing Moderna, which has a competing drug for COVID, with Pfizer. But I don't think you can go wrong with these stocks. It doesn't seem to be a big focus of either party going forward. Of course, they talk about it, but nobody's been able to get drug prices down. So I think Pfizer's fine here.
Okay, let's take this Spotify call, Joe, and think about it in a bigger picture, okay? Because Spotify today gets downgraded at Guggenheim to sell. Okay, they say shares are more than fully valued. They raised the price target, however, to 223 from 170. Now, there's been a lot of momentum behind the name, so I understand why they would perhaps do that. But I also wonder whether this is a call to think about for a number of different stocks, the other Spotifys of the world, if you will, that have had these exponential rises in the last, many weeks. How about that? If you take a broader look than just at Spotify in this call.
Right. So you're talking about Zoom technology. You're talking about DocuSign.
You're talking Shopify.
About
Yeah, exactly right. That's exactly right.
Exactly. So listen, Scott, will they be a source of funds? And I apologize, I'm not sure if who said it before, but someone used that term. Will they be a source of funds in a correction? Yes, they absolutely will. But I believe not only is there technical momentum behind all of those names, but there's also fundamental momentum behind all of those names. And I believe if you are presented with that type of an opportunity, certainly in a name like Spotify, where we would get a correction where they're utilized as a source of funds, I 100% am confident you want to utilize that to acquire those names and take advantage of that correction, because there is fundamental validity behind the moves that we've witnessed.
Yeah, I mean, look, you can look at that move right there on Spotify, as we just showed you, Steve, prime example of a stock that's gone parabolic, right? And more recently, look at that.
And I know people that own it. I don't, unfortunately, and they don't understand it. What's interesting is that Spotify's up today, and the others that you mentioned, such as Zoom and Teladoc, they're getting hit. So, look, this is part of the lunacy in the market, but they're going to continue to trade on the fundamentals going forward, the momentum in the fundamentals, regardless of valuation, because you can't put a valuation on these. But in a market correction, they'd be the first ones that I would go to short if I were going to short stocks.
The stock's up 50. Let's just it's almost 50% in a month. The other question, Shannon, then we got to take a break. Can the tech market more broadly withstand a major correction in some of those names? If you have a tale of two markets, as Steve says, let's say within the tech landscape, you have the big five, and then you have a lot of other names like Spotify's. Can the overall market withstand a major correction to the high flyer part?
I believe it can. I think there's two different types of technology right now. There's two different types of stocks in that sector, and so I think it can withstand it. I think that if there are several of them that pull back, I think that that's more of a threat. But I see a much greater threat, and Joe has said this, in the top end of the technology market, in the larger companies, the mega cap names, than in some of these smaller companies that have had these parabolic increases.
All right.